When I was 18, I thought to myself, what do I want to be in life? I don't think there's a life purpose a life purpose that counts for everyone. And I thought to myself, what should my life purpose be? I think it's something you can more or less choose. So what do I want to focus my life on? And I always had great admiration for people who are able to be really great in not just one but multiple areas. Like, for example, Arnold Schwarzenegger, he was an actor, he was an athlete, and he was also a great businessman and politician. And I thought, I'm still young. There's a quote by Bill Gates who said, people underestimate what they can achieve in 10 years, but overestimate what they can achieve in one. And so I started Googling in all kinds of different areas, how long the best of the best, how long it took them to reach the top. And many of them actually made it under 10 years or within 10 years, approximately. So I thought, I still have a lot of 10 years left of my life. I want to try to become one of them. That's why when I started boxing, because at that point I was doing bodybuilding.
Welcome, guys, to the ValueHunt podcast. Today we are here with Timon. He's an esteemed friend of mine, and among many things, he's a YouTuber, almost professional boxer, and passionate about investing. So I don't see any reason for not having a great conversation with him today. He's also super young, so it will be very dynamic for sure. I don't know, Timon, do you have anything to add to this short introduction or anything to say?
Thank you for the intro. The only thing might be I myself do podcasts and I interview guests, but I was never on the other side, so I'm really excited for this one. And yeah, I think that's it. Thank you.
Yeah, great. Sounds good. I think it will be a good experience. I also have never been on the other side. Maybe I may self-invite to your podcast.
Yeah.
But anyways, if you don't have anything else to say, I would jump right into the questions, which are pretty challenging. So be prepared. And my first question is, who is Timon? So I always think this is a hard question to answer, but let's test your skills.
Yeah, you sent me some of the questions beforehand, and I thought about that one especially because who is Timon? I think there are many ways how I could define myself. And I think your intro did it best. I'm currently a student of psychology. I am an investor, I would say, because that's a passion of mine. I put a lot of time into it, and yeah, boxing and media. Those are the three big parts of my life. Who am I besides of that? I think I'm a somewhat nice guy, and I'm young, 23 years old, and trying to achieve big things.
That's great. It's a good, actually, better than expected answer, because sometimes people just get confused. Okay, who am I? Because it's hard. It's hard to answer. I think that from here we can go in many ways, but maybe let's just jump right into the investing part. Like, what ignited your passion for investing? And I kind of relate to you in this sense, but it's investing is kind of a more nerdy passion, and then you also have boxing. So I'm curious to know, like, how does that relate, and really what ignited your passion in the first place?
My passion, I think the when I began investing, it was mainly for the purpose of making money, and I was always very cheap. So I had a lot of money laying around on my bank account, and I didn't really know what to do with it. And I thought, that's dumb. I can't just keep it there. So that's how I at first came into investing, and then I found the great community. You yourself know it, Good Investing Plus from Timon Wersch, and I was able to meet a lot of people who are ahead of me and were able to teach me some things. And yeah, that's how I came into it. And obviously, a lot of YouTube videos. YouTube is one of the best things that ever happened to me or happened to everyone. I would say YouTube is so great. Yeah, I don't know. Investing in boxing don't really fit together. That is true. Um, yeah, how my when I was 18, I can do the story like this. When I was 18, I thought to myself, what do I want to be in life? I don't think there's a life purpose as that a life purpose that counts for everyone. And I thought to myself, what should my life purpose be? I think it's something you can more or less choose. I think so. What do I want to focus my life on? And I always had great admiration for people who are able to be really great in not just one but multiple areas. And like, for example, Arnold Schwarzenegger, he was an actor, he was an athlete, and he was also a great businessman and politician. And I thought, I'm still young. There's a quote by Bill Gates who said, "You people underestimate what they can achieve in 10 years, but overestimate what they can achieve in one." And so I started Googling in all kinds of different areas, how long the best of the best, how long it took them to reach the top. And many of them actually made it under 10 years or within 10 years, approximately. So I thought, I still have a lot of 10 years left in my life. I want to try to become one of them. That's why when I started boxing, because at that point I was doing bodybuilding, but more as a passion. I was good at it, I would say, but I've never done any tournaments or anything. And I wanted to find a sport where I can do those and where I can also succeed. Boxing for me was actually, I wanted to do MMA, if I'm being honest, but at that time I wasn't allowed by my parents. But and boxing was the first step for that for me.
Yeah, box is
And
safe.
and what I wanted to look for is a sport, because at that point I already thought, yeah, I want to be good at this. And what sports are there that are complex enough so that I can become good, even though I don't know if I have the right talent for it. So, for example, sports that are less complex, like running, there are a lot of genetical factors involved in it, and I might not be the right person for that. I don't know anything about running, so I can't really tell. But there's a high likelihood that it's not the right sport for me, or it could be not the right sport for me, and I would just learn that after years of already training. So boxing or MMA even more is complex enough so that different types of people and different types of athletes with different types of bodies, taller ones, smaller ones, can succeed in that sport. That's why I chose it. And now that is my main goal until 2028, so 10 years, to go to the Olympics. And because boxing doesn't take the whole day, or you can't train the whole day, it's even bad for you. You need to consider regeneration for your body, and in that time your mind is free and you can do other things like investing, for example, which then came for me as a passion.
Nice. That's a beautiful story, actually. And I think it's a pretty complex and rational way of thinking for an 18-year-old, but I really like it because most people kind of stumble upon their success. Let's say they choose a sport because their parents used to play it or because it's popular, and they don't really go into something new saying, I'm going to be the best. So it's interesting. It's a different approach, and man, you have all my support, and I think you, with your skills, you can achieve that for sure. But maybe we'll come back to boxing and other hobbies at the end, and for now focus more on the investing side, which you concluded with. And I'm very interested to know, what's your investing style or philosophy. Do you prefer to run a bigger portfolio, less concentrated, or yeah, just expand on that if you can.
My investing philosophy at the moment is really dependent upon my. I would call him a mentor. I don't know if he would call it that, but someone out of the community who I learned a lot from, and we
Sorry,
help
just
each other.
before you continue, this is a terrible interviewing habit, but now that you mentioned the community, maybe you could explain a bit, because I'm pretty sure our viewers don't know what's the community. So yeah.
Oh, sorry, of course. So Tilman Versch is a podcaster. He has a value investing, I would say, a podcast or an investing podcast, and invites a lot of investors and CEOs to that podcast, and he built a community for his fans and also for these CEOs and investors, that they can join and to meet other investors who are like-minded, or to discuss ideas, and that community is called Good Investing Plus, and I'm a great fan of it. So, and in that community, I got to learn. I won't say his name now because I'm not sure if he wants to. I think he wants to say a little bit under the cover. But I got to know a small to mid cap investor. I mean, he also invests in larger companies, and I liked his style, which was value oriented, which was concentrated. That's one thing you asked for, and like I said, mainly smaller mid to mid cap German stocks, and I kind of adapted to that because I was able to learn from him and exchange, I would say, for research I do for him, mainly doing Excel spreadsheets, etc. And yeah, so I kind of leaned on his investment style, and I do really like it. It fits with the old school Warren Buffett philosophy. So mainly really cheap stocks, but he also looks for quality. But he's really a value hunter, so mainly cheap stocks, but also quality cheap stocks. But he won't buy something, and I won't buy something above, I would say, in general, 20 PE.
Yeah, for sure. I had the chance to meet him, thanks to you also. I mean, mainly thanks to you. And I can tell he's very smart and he's really value oriented. So he kind of made fun of some of the stocks I own in a kind way. But yeah, it's true. And I think you have a great mentor there. And it's interesting to see that relationship play out, because he's experienced, you're young, and maybe it's a win-win for both. So yeah, it's very good that we are in this community. And maybe you could also tell us, how did you met Tillman?
How did I met Tillman? That's actually quite a boring story, I would say. I looked for investment clubs online that I could join, because we didn't have an investment club in our college. So I wanted to find like-minded investors who I could learn from. That's why I Googled, and I found the Good Investing Club. Yeah, that's it. That's how I found Tillman. Oh, actually, I didn't know about his podcast beforehand. I just learned about that later on. So yeah.
Okay, great. But I thought it had something to do with your YouTube, but no, it's just
No.
pretty straightforward. Yeah, interesting. And what about your YouTube? Because you also have a YouTube channel.
Yes. I have actually multiple YouTube channels. I started with a friend of mine interviewing guests in Germany as a podcast, and now I have the Value Investors Club. Some people might know it. That's my channel name on YouTube, but it's actually a blog, I would call it. I don't know, a blog forum. I don't know, online, where value investors can post their ideas. It's exclusive, so you have to be let in by the community, by the community managers. Um, they evaluate your idea, and if it's well researched enough, they will let you in, and then you can get the other ideas on live. Otherwise, you have to wait a few months. I think 45 days. I'm not sure right now. 45 days until you can see the ideas. And I really like that concept. I really like that forum. And so I started reading like every single blog post on there, because those are really, really great investors with profound ideas. and I thought to myself, why not maybe add a little value? I would like to listen to those blog posts rather than read them, but there was no possibility for that. So I thought I would read them out loud, so other people may gain value from that, so that they can listen. That's what I do on the Value Investors Club. That's a YouTube channel. Currently, I have concentrated it a bit more. So beforehand, I look at the companies and just very briefly and look if they fit to my investment criteria. And if not, I won't read the blog post. So that's why I got a little slimmed down. And now I also want to incorporate interviews. So do SU and interview value investors
Nice.
or other guests.
That's an interesting story too. I must tell you, I don't know if you remember that I told you, oh, I'm going to model you and read annual reports. It turns out that annual reports are very long to read. And when you read out loud things, you get tired very soon. So I tried actually to read an annual report out loud for my YouTube channel. And I couldn't do it until the end because I was just too tired. It was summer, it's super hot, and it was hard. But anyways, I posted on my YouTube channel as fail number 1, and it's there documented my failure. So just to let you know.
I think the idea of summarizing annual reports is a really great one. But I don't know if I would read the whole one out loud. It's also, I would say, a value add. I don't think the value add on the blog post on the Investors Club is very great. So if you really want to become a YouTuber with that channel, with that type of content, I don't know if that is possible. And for annual reports, I think you would have to slim it down. You would have to summarize it a little because there are a few. It's not that easily digestible, I'd say.
Yeah, that's for sure. I should have thought about it beforehand, but I learned that through experience. So, but anyways, it was a good failure and it didn't cost much, just a few hours. But anyways, I would like to ask you, I'm sure you had some failures in your life, as everyone does. I would like you to expand on maybe some investment failures or mistakes, and how do you learn from them, actually?
So the learning part is quite. I'm gonna start with an investment mistake. Okay, I have two actually.
Okay.
I would imagine when you ask that question, you wait for an answer that is somewhere like this stock. That's I bought into it and it was terrible and went to zero. I have that kind of story too. I didn't went to zero. That's not, but I went out with a loss. But I think the biggest investment mistake I made is that it took me too long to start investing in the beginning. That's a problem of mine I always had. Starting something, I always learn a lot about it, and I plan and I plan and I plan, and it takes a long time till I actually start. And I think that's something that I should have done differently, because it's totally different just learning about a stock and actually owning it. So if you have listeners who are just beginning in investing, I would encourage, with a small position, I would encourage them to start buying him. Obviously, do research, but don't wait too long to get skin in the game.
Interesting. And what's the other one? You said you had to.
Yeah, the other one was Warner Brothers Discovery. So that's actually the only stock I lost money with. I mean, the only stock I went out with a loss. I have stocks that are down, but I won't cash out yet. Warner Brothers Discovery. That was one of my earlier investments. I bought it because Seth Klarman, Seth Klarman bought it at that point of time, and I was a great fan of his. it was a spin-off. I read about spin-offs in the book. I forgot the name, from Joe Greenblatt. You might know it. And I did a little research on the
I'll
company.
put a picture.
Sorry?
I'll put a picture for the viewers to see. Then I'll ask you later. Yeah.
The picture? I'm sorry, I don't
I'll
understand.
put a picture of the book.
Oh, of the book. Okay, yeah. Okay, I got it wrong. Yeah, and I invested into it with not too much research done. At that point, I was not like how I am now with more research, because I thought about the other mistake I shared with you, and I was like, I had to get skin in the game. I just knew this great investor invested into it, so there got to be something about it. And like all great investors say, like Warren Buffett says, don't just copy others, because when it goes down, you won't have the conviction. And that's exactly what I didn't have. That's why I sold out with a loss, because I informed myself more about the management, especially, and also the company in general. And I didn't like it as much as I thought I would in the beginning.
That's a great story, actually. And now that you talked about Seth Klarman, maybe could you share other lessons that you learned from either mentors, maybe the mentor we were speaking about before, or other investors? Like, what's the biggest lesson that you think you really learned and you apply from these people?
Whew, I don't know if it's the biggest lesson. Just the one that comes to mind right now is, as I met more successful investors in person, I realized they have one thing in common, or most of them at least. They're really, we say in Germany, there's a word you can say, Erbsenzähler. They're really exact with their numbers. So not only with the numbers, with everything. Like even the things you would think are not that important, they know that stuff. They know all the details. They're yeah, sorry, Erbsenzähler. I would have to look it up, but that's the best explanation I have for that.
I thought you got the idea across, and I really agree with you. It's like that attention to detail, and yeah, nothing slips through their research, and that's actually an interesting thing, because, and also maybe a dilemma I have, which is between like doing deep research and being opportunistic, because the stock market is very dynamic. Even though there are real businesses underlying those tickers, the prices might move pretty fast. So the time lag between spotting an opportunity or a possible opportunity and doing deep research may be sufficient to make the price move. So I don't know if you ever thought about this, but I would like to understand what's your view on this topic. Like, how deep should you go before placing a position, and do you first build a small position, and then as you get familiar with the company, increase that? How do you go about it?
Yeah, that's exactly what I do. I look at the fundamentals first. If I like the company, if I like the management, just on a first view, and if there are other factors, like I will look up what is the reason why the stock. Typically, I buy when the stocks are down, and what is the reason why the stock is down. And if I think that's something that's solely temporarily, I think I understand the reason why it's down, and that it's not problematic in the long term. Then I will start with a small position, and then do more deep research, and then I might increase my position.
And when you say deep, how deep is it? Because there's also an opportunity cost, because you can be learning about stuff that it's not really relevant. That 80-20 rule, I don't know, like how deep do you go? Because I do know your mentor goes very, very deep, and he's always asking questions to management and things like that. So what's your balance, let's say, in that?
So for me, right now it's mainly about learning the craft, which is why I really orient myself on my mentor. And if he goes deep, I will go deep as well. And for me, that might take longer time. So I will I will try to go just as deep as he does, but it will take longer for me. So, and there's an opportunity cost, yes. And if he already has made has an opinion about the company because he has done that research and he wants to look into another one, I will help him do the spreadsheets, for example. But I will still try to figure out what the other company is truly about, and because that's where the main learning points are for me. So how deep do I go? I don't know how I can best answer that question.
Maybe let's picture this with an example, because I find this question very intriguing and hard to answer, because people always say, oh, I do deep research, but what's deep? Like, what does that mean?
Okay, so what we do, our process, I can describe it, is we first put in the statements, the financial statements, into Excel for the last what's that? Till 2007 usually. So we do have two crises. We have two crises in that time span, and then we look for obviously the free cash flow, is it increasing, decreasing, etc., but also we look for anomalies in the numbers. So if we see in 1 year maybe they've made an acquisition, you can see that, and then you go into the acquisition. Why have they done it? What was the idea from the management about it? We type in those, we get to the annual report of that year and search for keywords and try to find an answer for that question. And another year, then maybe the marketing costs go off the roof, or in general, maybe the company we have with HelloFresh, they have really, really high marketing costs, and we still weren't really able to get behind that, why that is, why they're so high, and if it's really sustainable, the business model. And so we have a question that is created by the financial statements, and then we will try to find an answer. And yeah, that's basically the process.
That's interesting, and it's nice that you mentioned that you look for two financial crises, because he also said that to me, and I thought, oh, that's smart, because you can actually back test what the management did, what did they say, how did they act, and it's a smart approach indeed. Yeah,
Like I said, I'm really oriented on him.
yeah,
I do as he says.
that's that's an interesting thing to note. And also, when you say a small position, what's that? 3%, 2%?
Small position is 3% for me.
Okay, yeah, he also said that.
Yeah, I really admire him. I think he's really, really good at what he does, and he's obviously better than I am at the moment. So which is why I will take his ideas from him. I will use them on my own.
I think he would be proud to hear that. But yeah, that's good. And this question can play out in many different ways, but let's apply it to investing. What are you running from? Because it's very broad to say what are you looking for. Okay, good companies, high returns on capital, cheap. But what are you running from? Like, what do you avoid at all costs?
I would say the biggest turn off for me is when I guess it's management then, because when I can't understand why for example, why they made an acquisition in that year, or why they yeah, why the company does what it does, I guess. And when it's not when the annual report and the numbers are not able to explain that to me, that's a turnoff. So I don't know if that is management necessarily, but if I can't understand why the company operates the way it operates,
Okay.
even if it's successful with it, even if it's growing, if I can understand it, then that's a turnoff.
Right, and that's already at a deeper level. But let's say from high level, you look at the financial statement or the ratios, or just let's say a Yahoo Finance page of a given company. If what is like a metric that, okay, if it's out of the your
Okay.
sweet spot.
Um, Obviously you have to look at the earnings, how they have changed, and how but in general I'd say I won't buy over a 20 PE or EV/FCF. That's more of the metric I like to look at, and I don't like high debt. So yeah, but I think that the biggest metric for me, the biggest turnoff would be a high PE on a long-term basis. Let's say above 20, but usually it's 15 or under. That's what I like. That's a turn off. And because I am not, the other one will be if to me it's not that predictable. So what I mean is in the past the earnings, the revenue, everything is really fluctuant. So in some years it's high, in others it's lower. That's something my mentor he might be able to understand why that is, and he might be able to evaluate the company still. I'm not there yet. That makes it way harder for me. I'm not sure in myself. I don't have enough confidence in myself there, so that's why I tried to stay with the easier ones.
Okay, so you like consistency. I think
Yes.
it's a common theme to both of us. My first thing I look at is consistency. Are they consistent? Either if they are growing or just stable.
I think I
That's
sorry.
interesting. No,
I
no.
think you can make money also with inconsistent companies. I'm not sure. I'm not confident enough in myself though for that. So to be able to understand them, I think it's easier in the beginning to stay with consistent companies.
Mm, that's really interesting. Yeah, and I agree with you. I mean, you can do great with almost any investment strategy as long as you are good with it and you understand it. So
Yeah.
it's more about that, and I agree. And also an interesting to this point, more or less. What are some bad recommendations you have heard so far in investing? Like, I don't know. Do you have anything that pops to mind?
Um. Yes. Okay. This might. Yeah, okay. I already kind of talked about it. This is more applicable to younger listeners, to for beginning investors, but it's obviously not a bad recommendation from Warren Buffett, etc., to say look for wonderful companies, and we only buy one company a year, for example, in tendency, and that has to be super great, and all others I let slip, I push aside, um, or the checklist he has, not the checklist, sorry, the I forgot what it's called,
Yeah,
but he
punch
says
card.
only
Punch card.
20. Yeah, exactly. The punch card. I think that might be great advice, but I think for the beginner investor, for me, when I was starting out, it would have been better if I wouldn't have focused so much on that, trying to find the perfect company, etc. But start more buying and selling, and get used to how it feels, the emotions behind it, and also doing the research, looking at new companies, looking realizing that you might have made a mistake, and being able to adapt then, and all these things. I think in the beginning it's not about actually making money, but learning as much as you can. So do small positions, but I would say don't look for that Seas Candy Geico uh, just when you start.
Yeah, I think that comes with a bit of hindsight bias from him, and also considering his own path, because he already knew about business, finance, accounting, all this kind of stuff. He was a book junkie, so he was reading all these accounting books. And maybe for uh, that type of person, it would be smart in hindsight to say, okay, I should have focused just on the 20 best ideas. But
Mm.
for someone like us, that's more uh, just yeah I bet you didn't learn accounting that early, so maybe you learned that through investing. At least that's my experience. So yeah, we are really paying for our MBA in terms of losses or opportunity cost. Maybe it's not the best decision, but we are learning. So I think that's great advice for the people that are looking to start out or started out, let's say a little time ago, and have little experience. And yeah, that's great. I never thought about it, and it's actually
What
a
would
good.
yours be? What would your advice, or what would you say is bad advice?
That's mm, I wasn't prepared for that, but for that yeah question. But I can tell you maybe the worst advice in investing uh, would be like risk equals volatility.
Mm,
So people that perceive risk as volatility, at least for me with my time horizon, I really don't care if for a year a company is down 50-40%. I mean, it's better not to, because maybe or actually it may be good because I can buy in more. But yeah, there's I think mainly in academia there's this notion that volatility is risk, and I don't really agree with that. But yeah, let's switch the roles again, and I'll continue asking questions to you, because actually I will share a small tangent here. I love Lex Friedman. He's a podcaster. I'm pretty sure you know him.
yes.
And in his most recent interview, he interviewed a biographer. He did a biography about Elon Musk and Ben Franklin, uh,
Mm.
Steve Jobs. So
Walter
I don't
Isaacson, right?
exactly. And he really was a big advocate of not talking too much in interviews. So letting people, uh, even in the moments of silence, like not saying anything, to see what people would come up with.
Mm.
Um, so I think I'm doing a bad job at following his advice. Just to say
I
that.
I think also, just as with investing, I think with interviewing there are a lot of different styles, and you have to find your own.
Okay, that's a good confirmation bias for my tendency to speak too much. But yeah, I appreciate that, and yeah, I see this more as a conversation, not really interview, because I really like that mentorship approach to things. It's not that I'm sure you know more than me, but I like that approach of learning together and not just like retaining information from
Mm.
other people. So I think that's interesting, and I agree with you. But I do need to learn to stay more, to let people talk more. But anyways, I think we should jump to the next question, and this is more to your. Uh, this is a more time management, or not time management, but more emotional stability. Because Warren Buffett, I think a great advice he gives is that if you don't have emotional stability, you shouldn't be in investing. And you know this better than me. You're in psychology, so I think you learn more about this stuff. And I would like to ask you, since you have so many passions, boxing, investing, YouTube, podcasting. Uh, if you ever feel overwhelmed, or you're lacking your focus, what's some, let's say, strategies or antidotes you use for getting back into the track? Because I'm pretty sure in sports such as boxing, you really need to have that emotional stability and that capability to switch back to to your track, let's say?
Mm. I think the best answer I have a very scheduled life. My every day looks pretty much the same for me. That's one easy step, more or less easy, um, one can do to be able to focus more. It's just make everything the same every day, the same. I eat pretty much the same food every day. I have the same hours for training. I have the same for everything, and so it becomes more of a habit, and you can better adjust your system, your daily system, your life as a system, and reflect on it. For me, one of the biggest parts is waking up at the time I want to wake up. So starting the day at the same time, or at the time that I want to start the day, and having my first training session in. Then everything else gets easier, or everything else gets more on time. If I'm able to do my training session, my morning not morning lunch training session, all things that come after, not just boxing but also investing, studying, everything else, will be on track.
Yeah, that's great advice, and I couldn't agree with you more. My I think we're pretty similar, and that's why we connect. But yeah, my days are so beautiful, but they're pretty much the same. Just like I learn new stuff every day, but the structure is actually the same, and that gives you so much simplicity, like of thought, because you can say, okay, I can do this in that slot,
Mm.
and organize yourself. And I really agree with you that doing that training session right in the morning after you wake up, it really helps. And now that we got more into the boxing or sports and life stuff, uh, could you tell us how is it to train that hard for sports? Like even maybe some recovery tips, because I'm pretty sure I'm not as good as you or as good as you were at bodybuilding, but I do go to the gym almost every day, and I like to lift weights and stuff. So maybe this is very diverse from what we typically would speak about in our channel. But yeah, could you expand on more your sports section of your life, and how is it, the experience?
So it's a habit game for the first question. Is it hard or anything? It's a habit game. You get used to it, and yeah, you have to always listen to your body. I think that's one of the things one forgets in the beginning, when you start reading about fitness, sports, about all that stuff, or listening or watching YouTube videos. You will hear, yeah, you have to train 5 times a week or 4 times a week, or whatever. And I think what's important is that you listen to your body. If you're still sore, for example, and to get really basic, you might need more recovery. You might need more time before the next workout. And also with when you just feel that you might not be your central nervous system might not be there yet, not just the muscles.
Yeah.
um, you have to adapt to that. You have to figure out why that is. You have to listen to your body, and then ask the question, why am I feeling this way? And try to change different things, and see what may work. I think for recovery, what's really important, or I would say the most important thing, is sleeping enough. And I think your body more or less knows how much you should sleep. So if you now just sleep in, you might sleep for a long, long time. Okay, but if you do that on a consistent basis, if you wake up when your body tells you to wake up more or less, for a consistent amount of time, and get in bed early enough, so you can do that, um, then I think your body takes the amount of sleep it needs. And also with nutrition, the same. You should watch your macros, obviously, or also your micros. But for me at the moment, I'm not doing bodybuilding anymore. I don't need to get big. I don't need to shred down. I think my body knows how much carbohydrates, at least, he needs. So I eat the amount. I eat the same amount of proteins every day. I eat the same, probably approximately the same amount of fats every day, and I eat the same amount of greens every day. And also take my supplements. But for carbohydrates, I think my body knows how much it needs. Some days I use more energy. I train harder. I train more often. Whatever. And then I need more carbohydrates, and I think my body knows it, and then has more hunger. And that's, I think, listening to your body. That's one fundamental key. Also to prevent injury and not become sick and all that stuff.
Yeah, man, that's our experience overlaps in that, because before, in this sense, I think people that really like to learn and apply the advice they hear from experience and high achievers, they tend to just copy mindlessly and not really apply to their own circumstances. So I'm guilty of that mistake too. Before, maybe I used to overtrain, and when really I understood, okay, I should just listen to my body and do what it tells me to do. I feel that my performance has gone up. I don't need to like take supplements or whatever, because I'm not doing it at a professional level or a more serious level like you. But I feel really comfortable with that once I started following that advice of listening to your body, getting the enough hours of sleep. That's pretty much the basics, and the basics move most of the weight. Most of the time.
Exactly.
So, that's super interesting. I think to finish our great conversation like in the best way, we should do a fire round, and I will explain what this means. So basically, I will tell you maybe 3, 4, 5 words, and you just have to tell me your first thoughts. It must be a short sentence. So that's basically it. And we will do this short exercise to finish. So my first word would be Kathy Wood.
I don't follow her that much. I know who she is, but I never had heard good things about her, so I don't really look at her much.
Okay, great. Inflation.
High. If I should say the first word that comes to my mind, in Germany now it's coming down, obviously, but we have problems with that.
Okay. Olympics.
Goal. Should I say word or a sentence? Because
you can either.
That's the first word that came into my mind.
Sure. You can say a word, but you can say a sentence, but yeah, just keep it short. Like first thing that comes to mind. But you can say a sentence. Don't worry about it. Now I would say Charlie Munger.
Wise, very wise guy, and great influence.
And what about love?
Important.
And yeah, last two are very kind of different, but yeah, God.
I'm not religious, so nothing really came to mind there. Yeah, I don't really have a connection.
Okay. And last, meaning or life, like meaning of life. You already touched on this, but yeah.
Meaning of life, I think for everybody it's different, and I think it's a choice.
Okay, that's great. Just a quick disclaimer, I said God and Kathy Wood and all these kind of people. I'm not expressing any opinion on these things. Like, I'm not saying I'm religious or I follow politics and things like that. So it's just an exercise. Take it as it is. But yeah, I think we had a great conversation. I really connected with you on other aspects that we hadn't talked about before. And yeah, I wish you so much luck with your projects, mainly your boxing, investing, and also now that you're going to start again podcasting for you on your own. I'm really excited to see how that goes, and I'm sure you do very well. So thank you so much for coming.
Thank you very much. Actually, the last round, the fire round, that was really interesting for myself, just to reflect. As you said the word love, it took me a long time to answer, and I don't know. I will look into that. That one was hard for me. I don't know why. I will look into that.
Yeah, I took this again. I'm not that smart to come up with these interesting questions, so I just listened to a ton of podcasts, and there was this guy that asked this kind of deep things, but you can only answer in like one word or one sentence, and that makes it a really interesting and hard exercise. So yeah, I think you should use that question also in your podcast, maybe one. Once
I
you
will. Thank you very much for having me on. Yeah, I want to say real quick, if I am allowed to. My channel is called Value Investors Club, but I might start a new one for the podcast I'm doing, which will then be called Understanding the World. Yeah, thank
I
you very
will
much.
leave all the links in the description so people can reach out to you. And by the way, where can people reach out to you? Like, what's your preferred way for people to do that if they want to?
Oh my. I think best would probably be still over Instagram, which would be Timon underline WLH, or yeah, let's stick with Instagram.
Okay, perfect. I will leave that also in the description then. And yeah, again, thank you so much. I had a ton of fun today.
Me too. Thank you.